How can you be absolutely sure that the investments you make today will still hold value decades from now, 20, 30, even 50 years into the future? The harsh reality is, you can't be completely certain. Wealth has vanished in the blink of an eye throughout history. Fortunes have risen and crumbled with revolutions, market crashes, wars, and changing governments. But while nothing is ever guaranteed, history does leave behind clues, powerful patterns that reveal which assets stand the test of time. If your goal is to build not just wealth for yourself, but a lasting legacy, something that outlives you and supports future generations, then you need to pay attention to the kinds of assets that have survived the storms of history. These aren't speculative bets or hype-driven trends. These are time-tested, resilient strongholds of value that have endured global conflicts, societal collapses, and economic reinventions. There are 5 asset classes that have proven again and again to hold their value through it all. They are the foundation of generational wealth, the kind of wealth that grows over time, not just for you, but for those who come after you. If you're serious about financial freedom that lasts, this is where your journey begins. Let's explore the 5 most reliable long-term investments in history. Real estate. The first and most unshakable asset on our list is real estate, because no matter who you are or where you live, everyone needs a place to call home. Real estate has long stood as the cornerstone of wealth building, across all cultures and centuries. Unlike speculative assets that only exist in financial systems or on digital platforms, real estate is physical, tangible, and tied directly to human necessity. It's one of the few investments that serve both an emotional and practical purpose: security, shelter, stability. Even during the darkest financial times, market crashes, recessions, depressions, real estate has consistently bounced back. That's because housing is a fundamental human need. Stocks can crash to zero if a company fails. Cryptocurrency can vanish overnight. But a home in a solid neighborhood? That never becomes worthless. Over time, demand always returns, and with it, prices rise again. This cycle is what gives real estate its unique, long-term strength. What makes real estate even more appealing is the level of control it gives you. Unlike stocks, which fluctuate beyond your influence, you can actively increase the value of your property. Renovate it, improve its management, enhance curb appeal, or add functionality. Each move can generate real returns. And while you hold the property, you can also earn passive income through rentals. It's one of the few assets that pays you while it appreciates. Let's not forget accessibility. Many people assume investing in real estate is out of reach, but it's more achievable than ever. You don't need to be wealthy to get started. Countless families across all income levels have built their wealth through simple, smart property ownership. And the long-term returns speak for themselves. For instance, if you had purchased a median-price single-family home in the U.S. around the year 2000, you might have paid roughly $165,000. That same home today? It's worth over $420,000. That's not just profit, that's transformation. And here's the most important part. Real estate offers protection. It's more than just numbers. It provides psychological security. It grounds you. It gives you a home base during uncertain times. Or, if you rent it out, it becomes a self-sustaining asset that continues to grow in value while generating cash flow. As long as people keep moving, populations continue to grow, and urbanization expands, the demand for housing will remain. And where there is demand, there is value. That dynamic has held true for centuries, and shows no sign of slowing down. Real estate, quite literally, builds the foundation of wealth, one brick at a time. So if you're looking for a place to start, a place that doesn't just promise value, but proves it time and again, real estate might just be the smartest decision you ever make. It's not just an asset, it's an anchor, land. Following real estate, we come to its older and even more fundamental sibling, land. You can't have real estate without land, and land itself is the only truly finite asset on Earth. Unlike money, stocks, or even buildings, land cannot be printed, manufactured, or replicated. Its supply is fixed, immovable, irreplaceable, and that's precisely why it's so valuable. While every investment comes with some risk, land carries an inherent sense of permanence. It doesn't rust, rot, or depreciate like machinery or technology. Even if you do absolutely nothing with a piece of land, it still retains its worth simply because people continue to need it. And as global population rises and urban areas expand, this need becomes more urgent and more profitable. Governments can inject trillions into the economy by printing money. Companies can issue endless shares. Technology can create artificial intelligence and digital assets. But no one can create new land. Its scarcity is built into its DNA. That's why owning land has always been a power move for long-term thinkers, especially those looking to shield their wealth from inflation, market volatility, and central bank manipulation. Certain types of land are even more valuable than others. Think about coastal properties, fertile farmland, city centers, or land rich in natural resources. These serve critical social, economic, and environmental functions. And as people continue to migrate toward cities and hubs of opportunity, competition for land in these areas grows more intense. That pressure, in turn, drives up prices, and fast. What's remarkable is that land doesn't require constant upkeep. Unlike a house, which demands maintenance, upgrades, or renovations, raw land can sit untouched and still gain value. You don't have to lift a finger, and the land works for you in silence. But if you choose to be more active, you can lease it to farmers, energy companies, or developers, creating cash flow without selling the asset itself. In fact, some of the most profitable investments in history have come from acquiring underappreciated land and holding it through cycles of transformation. And here's where the true power lies: flexibility. Land can always be repurposed. Buildings age, businesses close, markets shift, but the ground beneath it all remains. A farm could become a neighborhood. A vacant lot could become a shopping center. A quiet field could become the next major highway route. When you hold land, you hold potential, and time is your ally. Historically, land has outpaced inflation because of that limited supply and ever-growing demand. It's been a quiet giant in the world of investing, stable, adaptable, and resilient. In times of uncertainty, people run to what's safe, and for centuries, land has provided that safety, silently building wealth in the background. So whether you're planning to build, lease, or simply hold, land offers a compelling proposition: control, protection, and growth. It asks very little from you and gives back with time. That's why the wealthiest individuals and families across generations have always owned one thing in common: land. Big company stocks. Among the many investments available, few are as accessible or as debated as stocks. But while the world of equities is filled with hype, volatility, and speculation, there's one category of stocks that has stood the test of time: shares in big, dominant companies. We're talking about industry giants: Apple, Microsoft, Google, Amazon, corporations so deeply embedded in modern life that they've become nearly indispensable. While smaller stocks often rise and fall with fleeting trends, these titans operate on an entirely different level. They don't chase waves, they create them. Their products and services aren't fads, they're infrastructure. Phones, operating systems, cloud services, e-commerce platforms, search engines, these are the arteries of the digital age. And the companies behind them aren't just surviving economic changes, they're shaping them. Yes, stock markets can be volatile. Prices go up and down. But dominant companies have proven their resilience time and again. They bounce back after downturns, innovate through recessions, and often emerge stronger after crises. When others contract, they expand. They buy out competition, push technological boundaries, and reinvent how industries operate. Take Amazon, for example. In 1997, a single share was worth $1.50. Today, it's worth nearly $200. Or Apple, trading for less than $1 per share in 2000, now soaring above $200. These aren't anomalies. They're long-term rewards for those with vision and patience. What makes these companies so valuable is their adaptability. Microsoft shifted from software to cloud dominance. Google expanded from search to AI, advertising, and infrastructure. Apple didn't just sell computers, they revolutionized communication, payments, and even wellness. They lead by anticipating what the world will need next and delivering it before anyone else. For investors seeking long-term stability and compound growth, big company stocks provide both. They offer the dynamism of equity with the security of legacy. And while no investment is without risk, history shows that betting on the builders of tomorrow is one of the most consistent paths to wealth. If someone asked you to name an asset that could outlast empires, revolutions, and market collapses, chances are your first instinct wouldn't be art. Most people associate art with beauty, culture, and luxury, not financial stability. But throughout history, art has quietly stood as one of the most enduring and discreet stores of value. For centuries, the world's wealthiest families have used art not just to showcase status, but to protect and preserve their wealth. What makes art so unique as an investment is that it lives outside traditional financial systems. It's not influenced in the same way by inflation, government policies, or company earnings. In a world where markets crash and currencies devalue, art exists as a timeless counterbalance, stable, tangible, and emotionally valuable. First, let's talk about valuation. Unlike stocks, which rely on quarterly earnings, or real estate, which depends on appraisals and comps, art is valued differently. Its worth lies in demand, story, rarity, and cultural relevance. A painting is worth what someone is willing to pay for it. That subjectivity gives art a powerful advantage. It's not tied down by formulas. As long as collectors value beauty, legacy, and expression, there will always be a market for meaningful art. Second, while art is often considered illiquid, it doesn't sell overnight like stocks. It can still unlock liquidity. Owners can use valuable artworks as collateral to secure large loans without ever selling the piece. This allows them to keep the asset and access capital at the same time. In fact, this is a favorite move among the ultra-wealthy, who treat art as both a long-term investment and a financial safety valve. Third, and perhaps most strategically, are the tax and regulatory advantages. Art can be stored in free ports, secure, tax-free storage zones in places like Switzerland or Singapore, where owners can keep their high-value assets without paying customs duties or wealth taxes. For many investors, this level of discretion and protection is priceless. In recent years, art has even outperformed the S&P 500. Legendary artists like Picasso, Van Gogh, Basquiat, and Rothko have works that grow in value year after year as demand for blue-chip art increases. And thanks to platforms like Masterworks, even average investors can now purchase shares of these million-dollar masterpieces and profit when they're sold. Think about this. Masterworks sold a Basquiat painting in 2024 for $8 million. Investors who bought shares in that piece earned over $2,600 in profit for every $10,000 they invested after fees. That kind of return, from an artwork that never produced a single cent in rent or dividends, is astonishing. Art doesn't decay. It doesn't rely on infrastructure. It doesn't panic in a bear market. And as long as humanity continues to value creativity, storytelling, and historical significance, art will hold its place as a powerful store of value. Whether it hangs in a gallery, sits in a vault, or rests in your private collection, art carries not just beauty, but legacy. So don't dismiss it as just decoration. Art is one of the most overlooked tools of wealth preservation. In a world of volatility, few things are as quietly powerful as a masterpiece. Big company stocks. Among the many investments available, few are as accessible or as debated as stocks. But while the world of equities is filled with hype, volatility, and speculation, there's one category of stocks that has stood the test of time: shares in big, dominant companies. We're talking about industry giants: Apple, Microsoft, Google, Amazon, corporations so deeply embedded in modern life that they've become nearly indispensable. While smaller stocks often rise and fall with fleeting trends, these titans operate on an entirely different level. They don't chase waves, they create them. Their products and services aren't fads, they're infrastructure. Phones, operating systems, cloud services, e-commerce platforms, search engines, these are the arteries of the digital age. And the companies behind them aren't just surviving economic changes, they're shaping them. Yes, stock markets can be volatile. Prices go up and down. But dominant companies have proven their resilience time and again. They bounce back after downturns, innovate through recessions, and often emerge stronger after crises. When others contract, they expand. They buy out competition, push technological boundaries, and reinvent how industries operate. Take Amazon, for example. In 1997, a single share was worth $1.50. Today, it's worth nearly $200. Or Apple, trading for less than $1 per share in 2000, now soaring above $200. These aren't anomalies. They're long-term rewards for those with vision and patience. What makes these companies so valuable is their adaptability. Microsoft shifted from software to cloud dominance. Google expanded from search to AI, advertising, and infrastructure. Apple didn't just sell computers, they revolutionized communication, payments, and even wellness. They lead by anticipating what the world will need next and delivering it before anyone else. For investors seeking long-term stability and compound growth, big company stocks provide both. They offer the dynamism of equity with the security of legacy. And while no investment is without risk, history shows that betting on the builders of tomorrow is one of the most consistent paths to wealth. Precious metals, gold and silver. For as long as humans have traded, bartered, or built civilizations, gold and silver have played a central role in how we store and measure wealth. Empires have fallen, currencies have collapsed, and financial systems have come and gone, but precious metals have always held their ground. They are the oldest form of money we know, and in many ways, still the most trusted. What sets gold and silver apart is that they exist independently of governments, companies, or economic systems. They're not tied to earnings reports or central bank policies. They don't rely on technology or infrastructure to maintain their worth. Their value comes from one thing: scarcity. There's only so much gold and silver in the world, and mining more becomes increasingly difficult and expensive over time. This limited supply is what makes them so resilient. When stock markets crash, currencies devalue, or geopolitical conflicts erupt, investors rush to gold and silver as a safe haven. They're not just assets, they're insurance against chaos. And throughout history, during war, depression, or inflation, these metals have provided stability when everything else felt uncertain. Gold especially plays a key role in global economics. Central banks around the world, from the United States to China and Germany, hold massive gold reserves. Why? Because even governments understand the need for something real, something that holds value when everything else crumbles. Silver, though often overshadowed by gold, carries similar strength. It also has industrial uses in electronics, solar panels, and medical devices, making it both a store of value and a practical commodity. Unlike stocks or real estate, precious metals require no upkeep, no tenants, no internet connection. They just exist. Quiet, strong, and consistent. And while they may not produce income like a rental property or a dividend stock, their true power lies in preservation, not performance. If your goal is to protect your wealth across generations, through market crashes and political uncertainty, gold and silver should always be part of your foundation. Because while the world may change and systems may shift, the value of gold and silver remains, a beacon of certainty in an unpredictable world. Building wealth is one thing. Keeping it for generations, that's the real challenge. Through history's chaos and progress, 5 assets have proven their worth: real estate, land, art, stocks in dominant companies, and precious metals. They don't just survive, they grow, adapt, and endure. Smart investors don't just think about the next quarter, they think in decades. They study what has lasted and build from there. So now the question is yours. Which of these timeless assets will you start with? The future belongs to those who prepare for it today. Choose wisely, invest boldly, and let time turn your decisions into a legacy. Until next time, stay curious, stay driven.